All right. Yeah, no, the my light broke. That's why my this side is not lit as nicely as it should. All right, let me get into character here and we'll get this thing done. I don't even know what I did with my water. That's not it. I don't know. Oh, here we go. All right. Well, one day is Thursday, March 27th, 2025. This is the week in charts. Obviously, I thank all you guys and girls for attending. If you're watching a recording of this, we do attempt to do them at 12 o'clock Eastern on Thursdays, or most Thursdays, unless there is a holiday during the week or something. Let me just check this. Okay. But thanks again for attending. All right, what are we talk about? Well, this should be 27 up here. Current market conditions, obviously, I have a lot to say about that. Your questions on trading, your favorite stock, and crypto picks. If you want to just start punching those in now, that should be fine. I'll let you know if it becomes a problem. So as far as the focus, I have lots and lots to do with mystery charts. I got a couple of reveals. I've got a new one that just triggered. There's one that's still a mystery, and an update, and so on and so forth on that. I want to talk a little bit more about trading the VIX. We had a VIX sell signal coming into yesterday, and we ended up with finally caught a elusive trend day, which was kind of cool. And last week, I said I was going to talk about a million little things, but I had a webinar afterwards, a podcast afterwards to attend, and I got tripped up and I missed it. So it's probably for the best because I was able to flesh it out a little bit more this week. But I am going to continue my series on a million little things that you need to make you a successful trader. And that'll make sense in 1 second. That was a disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up, all predictions about the future. A lot of stuff can happen between now and then. There's all my contact information. Feel free to shoot a screenshot of it, obviously. You can also reach me at dave@davelandry.com. All right, let's talk about the mystery charts and the methodology in action. Let me just do this just in case. Anyway, here's the mystery chart reveal, and this is Dash. Now, this was a short, and you can see the parameters down here in the spreadsheet. By the way, if you want to look at these, the newer ones are now on YouTube, youtube.com/Dave Landry, and there's a playlist for the core trading service. And also another, by the way, if English is not your native language, YouTube has a pretty decent, even with my bad coon ass, but YouTube has a decent AI translate. It's pretty good, especially if you know a little bit of English to begin with, which I'm assuming you probably do anyway. But anyway, if English is not your native language, don't sweat it. The translation, again, is pretty good. And obviously, the numbers are universal. But that was the parameters down below. And this was a bow tie. It was also a first thrust type of setup. Entry was here. The initial profit target was down here, and the stop was up here. Now, this was shown last week, and since then, it's had a pretty decent rally. I decided to take it off as a potential setup and replace it with two new setups, which we'll get to in just 1 second. So in this case, no capital was put into harm's way. As I say ad nauseum, I'm often shocked at how many times waiting for entries can keep you out of trouble. And I hate to retell the story, but many times people say, Dave, what should I do with that turd you recommended 6 months ago? You know, I'm like, I wouldn't recommend this stock. It's going straight down. It's like, yeah, you did 6 months ago. And lo and behold, I did, but it never triggered. So maybe somebody's going to ask me about Dash when it's at $500 a share and they shorted it at 178 or whatever the entry was. Here's another mystery chart reveal. This is BRBR, and the parameters once again are down below. Notice that it made kind of a classical TA pattern, kind of a double top, as you can see, and certainly at the least, it wasn't making much forward progress. And then, of course, you had a bow tie to the downside. And the bow ties are illustrated down here. Green means that 10 simple is greater than 20 exponential, and 20 exponential is greater than 30 exponential. This is a pretty good little metric to keep you on the right side of the market. And at the least, as I often say, I see indicators more as illustrators. They help to illustrate what's already in the chart, okay? So obviously we had a nice uptrend over here, and that's also evidenced by the Landry light. Market started getting iffy and choppy and sideways. I'm sorry, Landry light, but also the bow ties. Notice that the bow ties started meandering back and forth, red to green to yellow. Yellow means they're not in uptrend proper order or downtrend proper order. It means they're just going back and forth like that, as you can see in here, kind of chopping around. Anyway, the market pulls back a little bit to complete the pattern. Entry was here, stop was up here, and initial profit target was down here. And you can see this was shown last week. I think that's this day here. And it's pretty much gone straight up since. And once again, no capital is put into harm's way. Thank goodness. Now, here's a mystery chart for the week. And your parameters are down here, 7150, 8150, 6150. That would be the entry, protective stop, and an initial profit target, respectively. Notice that, obviously, looking at the bow tie proper order, this thing was in a really nice trend for a long time. Did a little bit of what some people call a squeeze back here in the moving averages. That's kind of a cool little thing. Maybe a little fodder for research, okay? But I just look at them as like a pullback or whatever. And then you can see it did begin to roll over, going from uptrend proper order to downtrend proper order. It wasn't a super tight one. It didn't go from one day to the next. It took a couple of days to make the transition, but that's okay. And then you can see the bow tie is here. It's a little sloppy, but not too bad. And it is coming off all-time highs. So you can see first thrust to the downside, also a bow tie. It's pulled back a little bit. Entry is here. Stop is up here. Now keep in mind, this was recommended a few days ago when it was much higher. So it did have a little bit more wiggle room to the chart. Grab the mouse. There it is. Anyway, initial profit target is down here. So we'll see if it triggers. We'll see what happens, and I'll follow up with it. Now this one is not a mystery chart because it did trigger this morning before I had a chance to show it as a mystery chart. And there are your parameters down below. I think it's still a pretty good looking setup if you didn't take it already. College fund worthy, right? No, I'm joking. Anyway, it did make a kind of a marginal double top, and at the least, it lost momentum by failing to make new all-time highs. And you can see the bow tie came together here, and that's where the moving averages come together and look like a bow tie, right? And if it does it fairly quickly without a whole lot of yellow, meaning that they go from uptrend proper order to downtrend really quickly, 10 greater than 20, 20 greater than 30 to 10 less than 20 and 20 less than 30 over like a one-day period, then you have no yellow. If it takes a couple of days, obviously you have a little yellow in between because it's neither uptrend nor downtrend proper order. And you also notice, again, these indicators really don't indicate anything. They help illustrate what's already in the chart. You had a pretty serious thrust down followed by a retrace. Entry was here. Again, it triggered a little while ago. I bought 145 puts. So we'll see how that shakes out. Initial profit target down here. Stop is up here. And whatever those parameters were, right around 160. Now here's a mystery chart follow-up. And you can see this is in the live portfolio. The initial profit target has been hit. Remember, it's 2% based on a hypothetical 100K account, which you can't see the number in here, but it's 100K is what I have this set to keep the math easy. It does not go up and down with a profitable or losing trade, respectively. I just keep it at 100K to keep the math easy. So you can see bow tie came together there, shifting from, again, uptrend proper order to downtrend proper order. Even if you were paying attention to the uptrend proper order, notice that we went from green to yellow and back to green, but notice that it didn't make a whole lot of progress in that over that time. So it was at 27-ish, in February, and way back in early December, it was also at 27. So at the least, it's lost momentum. So again, not to beat the dead horse, always look at the charts, no matter what your indicators are saying. Anyway, pullback was there, entry was there, stop was up here, initial profit target was down there. We did hit the initial profit target. When that happens, obviously, we bring that stop down to break even. And now we have what Charlie Kirk has named a free roll. So worst case scenario, barring overnight gaps, I don't know, gaps can happen, right? But worst case scenario, barring overnight gaps, you scratch out on the remainder of the shares. At least you make a little bit on the trade. And there's a potential for a home run now that you have that free roll or that free position, so to speak. Okay, any questions on the setups? I know I kind of blew through them. Probably need to slow down a little bit. So I was running late earlier. Like I said to the people here locally, not locally, but in a GoToWebinar, one of my lights broke right as I was setting up. Anyway, let's talk a little bit about trading and timing with the VIX. Now, I spent a lot of time in this last week, so I just kind of want to give you the gist of it this week. If you can't sleep at night, go in and watch last week's presentation, borrowing a line from Greg Morris. Just don't operate heavy machinery afterwards, right? But anyway, the VIX tends to get stretched one way or the other. And VIX is a measurement of volatility. It's a measurement of how expensive, so to speak, the option prices are. And when the options prices get super duper expensive, the market is due to rally because there's such a panic mode in the market, and those premiums come off really quick and the VIX begins to implode. And the converse is true too. When it gets stretched to the downside and the options are really cheap, it suggests that there's complacency in the market. So kind of look at the 10% above or below the 10-day simple moving average as, I got a dog monitor here to turn off. She just found us, my wife just got home, she found a squeaky toy. That'd have been interesting. Anyway, so when it gets stretched one way or the other, and 10% is a good round number, and just to let you know where this is coming from, in the mid 90s to later 90s, I did some work with Larry Connors, and he was a big fan of the VIX, and he turned me on to a lot of this VIX type trading, and I was able to do research for him and then come up with some systems on my own, which I gave to him. Or I should say we shared. But anyway, 10% is a good round number. The green line here is the high. If you squint your eyes, you can see the formulas underneath, okay, which is relative to the 10-day simple moving average, which I have here as this reddish light or line, or what do you call that, magenta maybe? And then this is the S&P 500 in the background, and this is the VIX, obviously. And the 10-day simple works pretty good. Larry explained to me that it's a reversion to the mean type of market. So I took what he said literally and used the mean, or used the moving average as the mean. And when it got stretched 10% or more away, I found that it's a good time to look for reversals. Now, one thing that I find interesting, and I haven't done enough of it, but I probably should just sit around and wait for this, okay? Wait for the high of that VIX to get something ridiculous, like 100% away from that moving average, and then look to act. Now, keep in mind, I'm going to touch upon this again in just a second, but keep in mind that the VIX does not act like a stock because you're measuring volatility. It's a completely different animal. And one thing that Connor's explained to me is volatility tends to overshoot itself. When it gets really low, it tends to take off. And when it gets really high, it tends to implode. And we could use that to our advantage. I went on this grail hunt for a long time on volatility. I didn't find the grail, but I learned a lot in the process. But anyway, that's the high, the low, and the close percent away from the moving average. The short-term VIX systems that I published, they were published at Dave Landry on Swing Trading, such as the CBR3 modified, okay? Those short-term systems are made to get you in the market for a short-term trade. You get in when the VIX is stretched, the beginning to revert back to the mean, and you get out when it hits the moving average. they absolutely print money, these systems, okay? But of course, there's a caveat. They print money until the market kind of comes unglued, like for instance, during the COVID, and I remember the COVID sell-off. I remember going back and doing some VIX research. I'm like, oh my God, why don't I spend more time on this VIX thing? Okay. Because it was absolutely printing money with short-term systems. But then when I got to COVID, it kind of blew up a little bit, and they probably worked fairly well since. But anyway, even though the short-term systems, I'm not a huge fan of short-term systems, by the way. Pure swing trading, I like to hold on to a piece like you saw with that CCL, because that's where the real money is in that second low. And I know I beat the dead horse and all these things, but it's something that I live, or at least try to make sure I live on a daily basis. But anyway, I think there's some use for the highs and the lows in the VIX, but everything in general is based on the close. And again, when you have these spikes, you want to look for a reversion to the mean, like right here again, like we talked about last week, back in August. And as far as trading them, I kind of alluded to this a second ago. Two things. One, the short-term systems can tell you when you're due for a reversal, okay? And that's pretty good information in and of itself, okay? You don't want to rush out and trade it mechanically on a short-term basis. But the other thing that I think is of use is when you're stretched one way or the other, look for a reversal. And I'll show you what just happened recently in the market. And I talked a lot about that to my Facebook group and to my peeps on the service. And then I even put out a couple of tweets on the same thing. But notice that the intraday VIX spiked on this particular day. And again, maybe there's a play you can do with that. And then maybe you can look for some sort of bounce play in the overall market. But you can see the August low happened after that spike. And notice that even the close of the VIX, which is pretty amazing here, 100 and something percent. And it would be fun. I know you want to party with me, but go back in history and look at all of these spikes when they're absolutely extreme like that. Now, I don't recommend catching a falling knife in the markets, but when it gets that crazy, you know you're due for a reversal. Anyway, this is the one I've been talking about recently. We did stretch to the downside here, and I was looking for a reversal, and yesterday's reversal was one that I found interesting, and I thought it was worth a stab. And I took a minuscule position in SPXS, and I actually did like a S&P futures on that, but not just a very small amount, and played that. And it's something that I don't want to try to do every day, but with the market stretched like that, it's kind of, it could be a little bit of a gift horse. And the other thing too is, and years ago I worked with a trader who would trade on a day trade, and he'd only be in for a few minutes. But he would look at weekly charts, he would look at daily charts, and he would put everything behind him and then look for an intraday entry. So when you're trading something like yesterday's sell-off, this day here, you've got a little wind at your back, so to speak, because you know the market's in a downtrend and you know it's overbought and it's uptrend. In other words, a pullback, and it's due to revert back to the mean, both in the VIX and the overall market. You can see that's what's happened over the last couple of days. We reverted back to the mean. Now, I put this in last minute, and I did a little research here yesterday, and I didn't find anything conclusive other than I think this could be something useful, possibly when combined with something else. So all I'm doing here is I'm looking at 10-day Landry light, meaning that the lows are greater than the moving average. And maybe 10-day is not the perfect moving average for this. I just thought 10-day for those VIX systems made a lot of sense because that's a 2-week time window, 10 trading days, right? But anyway, I think there's definitely something here. And as usual, you want to pay attention to the chart. So if the VIX is chopping around its mean or moving average, so to speak, then there's nothing to be done, at least vis-a-vis the VIX, right? But if it gets kind of extreme like this, when it begins to pull away from that moving average, okay, and you've got lots of Landry light, meaning the lows are greater than the moving average. And again, as I say ad nauseum, this just counts the number of bars that are above the moving average. So this would be bar 1 here, bar 2, bar 3, bar 4. And you can see it got up to 14 to 15 right around here. And I think if you maybe combine the Landry light with something like the stretched indicator, that might be something worthwhile. I have no idea what happened here, but you can see the market, the VIX at least in this particular case, imploded, and you had lots and lots and lots of Landry light, and then you had to pop back into the moving average. So this might be something to use in combination. So if anybody messes around with this, let me know what you find, and I'll be happy to share it with other people if you want to share it, of course. And you can see recently we sort of stretched to the downside based on this metric, but we already had a bit of that reversion to the mean move yesterday and earlier today, at least. So anyway, if you're, and I hadn't fleshed out the metric, but let's say 10 bars of Landry light, whatever the case may be, above the moving average, then it might be worth looking into. Now back here, obviously, you can just eyeball this, and even though it's only a few days of Landry light, you can see down below, you can count them 1, 2, 3. Okay, let's see 1, 2, 3 right here. I wouldn't use the Landry light as a measurement, but I would say, okay, wait a minute, that's that August spike that we talked about. This thing is what, 200% away from the moving average, and it closed 100% away from the moving average, so there's something there. So in and of itself, I don't know if there's something here. I would love to know if anybody would spend some time working on this. I just want to throw that out there as fodder for research. Leave a comment below if you're on YouTube watching the recording, and I'll be happy to address it and see if I could help you flesh it out a little further. I threw this last little bullet in here last minute, or first little bullet, I should say. Treat it again as a reversion to the mean. I want to make sure I got that point in. I see people draw like a head and shoulders top and a head and shoulders bottom, or double bottom, double top. I might have some relevance, but for me to wrap my head around something, and I learned this from Connors many, many, many years ago, it has to be conceptually correct. So as a volatility-based market, I don't think that makes a whole lot of sense to use a classical TA. But treating it as a reversion to the mean market, something I'm not a big fan of when it comes to trading in general, okay? Like, you don't rush in and buy a market just because it's imploding, because it's due to stop imploding, right? But with volatility, that's sort of how it works. Now, you don't want to be a hero. What you want to do is you want to wait for that reversion to occur and then step in. And it only matters what it matters. And that's where I think the Landry light, and that's why I threw that slide in last minute too. And that's why I was a few minutes late, one of the reasons, that and the light breaking. But I think that paying attention to that Landry light can help you recognize when you're just chopping around that moving average and you might not want to trade it, okay? And high or low, again, is relative. I mean, maybe there's a reason to talk about this, but I see a lot of people who are, well, a lot more famous than I am, talking about the absolute level of the VIX. And I think that's irrelevant for the most part. I don't understand why they do that. I mean, I get it. It's like, okay, we made a volatility shift from this level to this level, and this is the new norm. I'm okay with that. But when they talk about absolute numbers, I think that's problematic. And as I said before Larry did all this other VIX research, before we worked together, I should say, he had a VIX system which was plus, which if you were above 15, you did one thing, or below 15, you did another. And that probably worked for a long time, but that all becomes relative. I think since then the VIX went down, and 10 became the norm for a while. And right now, I don't know what the norm is for the VIX, so it might be shifting. So that high or low, again, is relative. And as I said a second ago, don't be a hero, wait for the reversion to occur. And you could keep in mind that you've got to really be careful. You have to really be careful with these VIX ETFs, because they're off futures, and that could open up a whole another can of worms, right? It gets really complicated really fast. But what I would encourage you to do is possibly use those on an intraday type of basis. But I wouldn't hold these things overnight. And again, that's what I'm saying here. Don't short-term position trade. Maybe take intraday trades only. Although major bottoms can start with a VIX spike. So it's a good thing to possibly use bigger picture with your analysis, but I wouldn't position trade off of a bigger picture. But it's like, okay, you're looking for that bottom in the market and you're not going to catch the falling knife, right? But you're looking for signs that it might be bottoming, not to act on, but just to kind of wrap your head around where we are. And you get that huge spike like we had in August, and the VIX is like, aha, this looks like a washout. We might be done for now, okay? And then follow up with a bow tie or whatever, first thrust or some sort of other pattern that would suggest that a transition is in place. And if you're really short-term oriented, maybe look at like an hourly or even a 30-minute bow tie or whatever. And then again, maybe look to trade intraday. It's a really good gauge for overbought or oversold, and I find it especially good for a market that's really oversold because you get that big spike in the VIX higher. Whereas if you're just kind of grinding along, you know, kind of like the little, remember the little, what's the little man, the little mountain man in, what's that, Price is Right, you know, just kind of going up like that. And that VIX will just kind of drift lower for a while. And that's a little harder to time off when it does that. But when it starts swinging back and forth like it has been now, I think it's a lot more relevant. And, you know, maybe I should make a mental note to myself. I'm preaching to you, leave it alone unless it's really stretched. And that's probably something I need to make sure that I'm doing too. All right, real quick. I know I beat the dead horse in the TFM 10% system, but I think it's important to show you where we are now because it's still long. And those are all the buys and sells are, and we had a buy back in last November. No, 23, November 23, and that signal's still long. And as I showed last week, I actually took 100 shares on kind of an S&G thing, and it turned into one of my biggest trades of the year. But I took, well, it was percentage-wise at least, I took 100 shares. I think it was back in May of 2023, and I just got out of that recently. See last week's webinar on that. And the point there is that trend following is phenomenal when it works. Now, when it works is the key thing. If it always works, you never see my fat ass again. Unfortunately, the markets would not exist if it always works. So the reason a lot of this works is because it doesn't always work. And hopefully that makes some sense. But anyway, the sell signal would be when you drop 10% or more away from the 50-week closing high. So right here on that day there, or that week there, you were at 100% of the 50-week closing high. You were making brand new closing highs. And then obviously we sold off from there. Now, without going into a lot of details, the bottom line is this system's intent, or the designer's intent here, was to create something to help you avoid the diaper change moments, as Ian McActivey calls them, when the market just absolutely implodes. And my thinking is, if a market, this is TA 101, right? If a market's going to go from A to B to C and B is somewhere in between, it's going to have to pass through B. So the B point to the downside here is 10% and below the 50-week closing moving average. Okay, that's the whipsaw filter, so to speak. And on the upside, we have a Landry light for the whipsaw filter. Again, I'm rushing through this just because I know everyone here that's attending live, for the most part, knows the system, and they're probably, their eyes are glazing over. I can see my numbers dropping, so I need to get do something exciting here. Anyway, any questions on Landry 100 or anything thus far? Now, I just want to spend a couple of minutes on Landry 100 this week. This is not real money on this, although I did do some real money trades for S&Gs, and of course, I started that as an experiment right as we were going into this bear cycle or bear move that we just had. I don't want to label it and get in trouble, but it's kind of bearish out there. And all of these are bought at brand new highs. Now, the closed trades have gone really negative on this, the trades that I've taken out of this list. And keep in mind that this is like a constant window dressing. Every day I come in, I take out crappy stocks, and then I put in new hot stocks. And it's a wonderful exercise, and I don't have real-time tracking on this. So somebody, again, as I preach each week, if you have some software, I haven't looked into it, but if you have some software that does real-time tracking, that'd be really cool on a portfolio this size and all. But these are all bought at brand new highs. Okay, so this one's up 94%, and the buy was right there. If you squint your eyes, you can see that's a brand new closing high. Kind of a stealthy thing. I learned about closing highs from the aforementioned trader who was the day trader, and that's something that he paid a lot of attention to, because a new closing high can be a little stealthy sometimes. It doesn't have the fanfare of a big old breakout or whatever, but you have this little quiet closing high, and that's one thing that I use with the buy at B pattern and the IPOs. And if you get really bored, go in and watch last week's presentation once again. That would be 320.25, and that's where I talked about the buy at B pattern. Anyway, this has had a pretty good run so far. And the reason I'm showing you these, and I'm not bragging on the performance here because I'd be willing to bet it's not fantastic if I added it all up. Again, the only way I have to track it is by the ones I've taken out. And of course, I'm taking out the worst first. So those numbers are pretty ugly. I'm not taking out something that's up 100% just off of all-time highs, right? But anyway, one of the many valuable things that comes from this is it does help you to see where the money is flowing. Like I said last week, we had a bunch of golds, and now we have even more. And at the bottom of this list, because they're listed as an ETF, there's a couple of physical gold stocks that I put in here. And then right here, these are metals, and some of these, like this NAC I just showed, I think that's mostly silver. It's something metal, right? And anyway, it's kind of interesting that they're all labeled industrial, but they're industrial metals and minerals, and each one might have gold, they might have some copper in here, and they might have some silver. By the way, I'm just noticing this by accident. I didn't realize I had Berkshire Hathaway in here. I wasn't even paying attention when I added that. So I'm just trying to be a good little trend following moron, and that's kind of interesting because when the market sells off, these value stocks tend to do a little bit better. Can never remember his name, and I always have to look it up. But I saw him speak once at I think it was in San Francisco, maybe 15 years ago or 10 years ago when I was speaking also. And he's from the NASDAQ. I can see his face and everything. For some reason, his name always escapes me. But he talked about how value becomes momentum and momentum becomes value. Okay. And if you're kind of looking at this now, you can see, well, these golds or whatever, they're kind of more value stocks, and they're becoming momentum. Okay. And then all your momentum stocks, your mags and all that, they're becoming value because they're getting cheaper, cheaper, cheaper. Not that you want to buy them, but they're becoming more of a value type of stock than a momentum stock. Now, he said something that made a lot of sense. If you never want to make any money, buy a mutual fund that does half value and half momentum, because one's going to be going down while the other one's going up. But anyway, I didn't mean to back into all that, but that's a really good way, or just another one of these things that kind of teach you about markets and show you money flows, is paying attention to these Landry 100 stocks. And you can create your own. The formula is super simple. I'm just putting stocks in here that are making a new 52-week closing high for now. And surprisingly, I found enough to keep the lists full. Now, if this move lower, I hate to say bear move, but for lack of a better word, this bear move lower persists, then I would imagine I might have to drop down to 90-day or maybe even lower highs. And that's what I did years ago to try to find more for this list. Now, keep in mind, and I think I have 99 in this, it's hard for me to see, but cash is an asset class. So if these things start stopping out and I can't find new ones, I'll just leave a slot, so to speak, for cash. Okay. Anyway, just some random thoughts, as I've said before, and I'll just go through them quickly. Momentum does end badly, unfortunately. As I said last week, relative strength in a bear market is okay, especially if you're going after something like gold. But don't just buy a drug stock, as I'll show you in a minute, because drugs are doing better than the rest of the market. It's kind of like rats leaving a ship. the ship's sinking, right, and all the rats run to the top, and just because they're higher than the rest of the boat or whatever doesn't mean that they're not going to eventually sink. The one exception would be possibly commodity related stocks, obviously. But it's a great way, as I've said, to see money flows. And this is left over from last week. This is the one I want to show you. So Abbott Labs, and I took it out at a loss, but you can see it was making all-time highs. So I'm like, okay, well, let's throw this in the list. And then it imploded, and the market, it caught up to the market. Or I guess another way of looking at it is the market caught up to it. All right, any questions thus far? Okay, I've been doing the series for quite some time, and hopefully I'll keep doing it for quite some time. And I was thinking that, boy, I'm going to run out of these things before I get to 1 million. But just this morning, I thought of one that would be pretty damn good. And I think I'm gonna be vain and then take the piss out of myself at the same time. I think the reason I'm probably good, I think I'm good at this educational business, is because I live the struggle. And one of the things I want to talk about with the million little things is system surfing, for instance, and the Holy Grail hunt and all the other good stuff. I think we all have to live through that and 1,000 other things, a million little other things, bad behavior things, in order to become successful and not do that anymore. So we're going to get into that next week, and I think it's going to make a lot more sense then. But the reason I think that I'm good at this, as far as the education is concerned, is because I do make a lot of mistakes, and I do get caught up in things, and sometimes I get caught up in, as that Dakota says, the intuition versus the intuition. And if all I did was wait and wait and wait and wait for the trend days, for instance, before I step in on an intraday basis, I probably would do pretty damn good. And I'm getting better at that, but I'm working on it. Also, I've actually, and I think the trading service has helped me too. I have become really good at being patient about putting capital into harm's way. I've reached a point where I used to couldn't wait to make a trade, and now, especially on the position trades, I'm really, really skeptical, and I think that's important too. But anyway, backing into a lot of things here. Imagine that, me going off on a tangent. But the point I want to make with a million little things is everyone thinks that they have this big epiphany and bam, hey, I'm a trader now, okay? I'm gonna get the license plate and whatever. And the reality is it's not a huge epiphany. It's maybe some little tiny epiphanies along the way, but it's definitely a million little things. And number 276,477 is keep an eye on the time. Now, I'm a big fan of these drug movies, these cartel movies. And I'm always a little let down when they're over because they all end badly, right? Spoiler alert, they all end badly. And I question myself, like, why did I put that negative stuff in my head? But I just can't help it. I'm kind of a sucker for these kind of things. And I've been wanting to watch the Sicario forever. Just never got around to doing it. I knew something my wife wouldn't really be into. And the other night I kind of chirped out, hey, let's see what this Sicario thing is. I knew what it was. But anyway, Kate Macer, which played by Emily Blunt. I tell you what, I have a new respect for Emily Blunt after this. I might have to go in and watch Devil Wears Prada again tonight, after seeing her in a brand new light. But she was excellent. She played Kate Macer. Now, she was an FBI agent, and slight spoiler alert here, she was recruited by the CIA under somewhat nefarious reasons, and she thought she was going in and do a lot of good, and there was a bit of a hidden agenda happening, but she was wonderful in this role. And one of my favorite actors is Benicio del Toro, and he played Alejandro Gillick. Now, he was a CIA operative, or so we thought. Now, a little spoiler alert. I'm not giving anything away here. And Kate Macer, she's in over her head. And she's like, okay, you are this drug cartel expert. So, Alejandro, what do I need to know about the cartels? And I loved his answer. And of course, everything with me comes back to trading. And he says, you're asking me how the watch is made. For now, let's just keep an eye on the time. Now, trying to figure out how the watch is made. This year we had terrorist wars, protests, political unrest, the Fed, CPI, snow white flops, earnings, analyst ratings, stranded astronauts rescued, and of course the big one was the Jessica Simpson breakup. Now, trying to figure out all that, okay, and how markets work is really an exercise in futility. And I don't want to pick on the media too much, but trying to connect the dots like that, if there were a way to connect the dots, then a lot more journalists would become traders. So don't worry how the watch works. Just keep an eye on the time. And it took me a long time to become a trend following moron. I was thinking about that the other day. Do I need to stop referring to myself as a trend following moron? I'm like, no, because the next time I fight the market, I have to remind myself. But I think that was probably, in hindsight, you're in the middle of something negative and you're like, what good could come from this? But I've kind of spun that shit into gold, so to speak. What's the old saying? You can't polish a turd, but you can roll it in glitter. I just demonetized. Anyway, I think that it was actually important, although I was very depressed when it happened because I respected the person that called me that. And he said some other really nasty things about it, which I'll divulge at some point in time about me. Anyway, he said he hopes I die penniless or I'll die penniless or something. But it was probably good for me because soon thereafter, as soon as I started fighting trends, I realized that I wasn't being a trend following moron, and I seemed to make money on balance, not, and I got raked over the coals recently by a client because I had a few bad stock picks, and it happens, believe me. But on balance and over time, being a trend following moron works out fairly well. Now, keeping an eye on the time, and obviously this is going to become dated really fast, but pay attention to what's happening in the market. Okay, you've got, or the S&P has uptrend proper order. It has had uptrend proper order for a long, long time on the weekly, okay? But pay attention to what's happened here. Pay attention to the time. Notice that these moving averages have turned down. The exponential moving average, as I learned from Greg Morris, the day a market closes below it, it doesn't matter. It's mathematics. It doesn't matter how many days the moving average is. It could be a 200-day, a 2,000-day. That moving average will turn down, okay? The simple takes a little while longer, okay, to roll over. You forgot Katy Perry going up to space. She's up, she's down. Great. Now that'll be in my head the rest of the presentation. Thanks a lot. But you can see on a weekly basis, we're sort of okay because we're still in uptrend proper order. When we cross over, that would be one of my metrics to say, aha, this is not a good market, obviously. Now, keep in mind that you will have some lag. So if they do cross over and we don't see a longer term sell-off, okay, then obviously there's lag in that, but there's other metrics to use to tell time, right? And we'll look at some of those, especially on a shorter term time frame. Katy Perry in space. Now here's again, the weekly TFM system we just talked about, and we're in that 5% zone, okay? We're more than 5%, okay, away from the 50-week closing high. So if we get back into the green, then I wouldn't say don't worry, but that's kind of my don't worry, be happy zone. As long as you're within 5% of all-time closing highs on a weekly chart, and you might want to write that down. That's a good little metric to really help you see the forest for the trees, kind of a 10,000-foot view, as opposed to staring at a tick chart, right? Watching it implode, thinking that the market's going to hell. Anyway, if we just look at a blank chart, which I often do, and draw a line sideways, the net price change, okay? Where's the market now? 57-ish, okay? 57.12. Where was the market way back in October of last year? 57.12, okay, or 57.50-ish round number, somewhere around that level. So we've definitely lost some momentum. And if you draw your connect the dots, connect the highs, okay, you have a bit of an inverted cup and handle. So the weekly chart is still okay, but okay being the key word in that sentence. Now, daily chart, we've got 30 EMA Landry light. I know you want to party with me, but the 30 EMA has become my favorite moving average. As a general rule, never buy a market that's below the 30 EMA, unless you're doing maybe like an intraday trade or something with the VIX, like we talked about earlier, that's fine. But as a general statement, on a position trade at least, never buy a market that's below the 30. And you probably don't want to short a market above the 30 either. But you can see we've had quite a bit of Landry light, 22 days. It's been 22 days since that's over a month's trading. 20 days-ish is about a month, okay? Since we touched that moving average and counting, okay? Now, take a look at the bow ties on a daily chart. Remember, the weeklies just kind of doing this right now. The dailies have already crossed over. Excuse me, they've crossed over a while earlier. I always have to think about what can I eat before the show? That's not going to come haunt me. But you can see green again, bow tie uptrend, proper order. Yellow means they're meandering back and forth, which happened fairly quickly here over one day. And then red means they flipped over to the downside. So that's one of many metrics, including the Landry light, obviously, but that's a metric that can help to keep you on the right side of the market, and at the least, maybe keep you from becoming too bullish, okay? And if you're above all these moving averages and they're pointing up and they're in proper order, uptrend proper order, then maybe that'll keep you from becoming too bearish. Now, one thing I like to do is just draw a line through as many bars as possible, and mathematically, that's equivalent to linear regression. And by accident, this is what I call my pickup sticks chart, so to speak. And you can see most of these linear regression lines are headed lower over various periods of time, and only the shortest of the short-term ones are headed higher. That's something kind of fun to do. I know you want to part of me is put those linear regressions in, but you know me, I just kind of like to eyeball the chart and of course draw that big blue arrow. And that's probably what pissed off that gentleman, is I was drawing only straight up blue arrows in 1999. And he began to short the market. Okay, let's shift gears. Let's hop over to crypto. And I doubt there's a whole lot happening in crypto at the moment, but let's get over there and take a look. And then if you have any questions on anything thus far, or any individual stocks or any individual crypto pairs while we're in crypto, let's see. I saw some comedian talking about, let me get my screen shared, the Zoom calls. All right, so screen is shared, I hope. Let me check on, YouTube's got a lag to it. Anyway, Bitcoin's not doing so hot. It's so crazy. You get on X and they're like, Bitcoin's going straight up. I'm like, really? And I'll go look and I'm like, I don't see it. That was yesterday or the day before. They were talking about how it was going straight up. And I'm like, I don't see it. Anyway, use all the same metrics we just talked about, Landry light, bow ties, etc. Probably bow ties would be the best thing to use at this juncture. You can see we've got tons and tons and tons of overhead supply to deal with, and we're well below all that in Bitcoin. So I don't see anything to do in Bitcoin for the time being with all this overhead supply. A lot of excitement when it hit 100K, a lot of FOMO entered the market. And I think a lot of early adopters probably use that as a getting off point. If I had to guess, there's no way of knowing. I know I saw some tweets on something to that effect. People that had gotten in at ridiculously low levels were bailing out a little bit, but that's hard to quantify. Again, you're trying to figure out how to watch works. But yes, do know that when a market is at a milestone like this and is having a hard time getting through it, then your early adopters may bail out, and also your late adopters, or the Johnny come lately, so to speak, those who bought around 110 because they thought it would just keep on going, or a hurt and pop. Now, I did say a while back, if we got through 100, I thought we'd go to 200 pretty quickly. And obviously that hasn't happened yet. So believe in what you see and not in what you believe. And I didn't make any bets based on this because that's just a feeling, right? And that kind of dates back to like Jesse Livermore, and he'll talk about, if you read Reminiscences of a Stock Operator, he talked a lot about stocks hitting 100 and then going to 150 shortly thereafter, that centennial mark, so to speak. So this is the 100K mark, and that obviously didn't pan out. Again, it wasn't going to trade off of that. But I think if we could get through it again and we start making new highs, then we might see the real move out of it and higher. But for now, the trend remains down. So far, we're just a retrace rally up, and we got tons of overhead supply. Again, anybody who bought in this range is probably looking to get out at break even. So until that clears, I wouldn't go anywhere near it. What did I say earlier about the 30 EMA? Never buy a market that is below its 30 EMA. Look at Ethereum, okay? It's lost 50%, almost of its value, all below that 30 EMA. And most of the time you had Landry Light below it. It's amazing how something so simple as Landry Light can keep you on the right side of the market. This trend following thing is great when it works, okay? When being a keyword in that sentence, but you're much better off trading with the trend than fighting it. Now, real quick, as I say quite often, when these things are blowing and going, and one thing you could do is use Bitcoin as your bellwether, right? But when Bitcoin is looking a little bit better than it looks now, sometimes these shitcoins are worth trading. When Bitcoin is, and I don't have a metric in mind, but let's just say below the 30 or at the 30 like it is now, be a little skeptical about buying these crappy coins, okay? So if Bitcoin can't rally, then these super speculative coins might not be worth a shot. And just real quick, here's your friend, the 30 EMA, okay? I know we had one little close above the 30 EMA, but look at this run for the most part. Ethereum BTC, ETH BTC, you were up at 0.03, and now you're down here. How low did you go? Almost a 50% haircut, at least a 30 or 40% haircut in the Ethereum versus BTC. But anyway, getting back to the relative strength game, you can sometimes, and sometimes being the keyword in this sentence, buy these shit coins when they're banging out new highs, and you're seeing a big expansion in range, okay? I haven't done a lot of trading yet. I think you go back about 3 weeks. I may have talked about one I was in briefly, but you want to see the market banging out new highs and err on the side of sitting on your hands again while Bitcoin can't seem to lift his head. And I'm not seeing a whole lot here that's worth doing. But you definitely don't want to buy anything below the 30 EMA. See, that's one of the stronger ones. But notice that it's been at 30 EMA for a long time. Went from what, 0.01 cent to 0.00327 or whatever. All right, no questions on the crypto. No thoughts on the crypto. All right, let's hop into the market. Let's see what's happening there. Let's see what's moving Landry 100. Okay, Yosh, a restaurant, okay? Yeah, a restaurant. Nobody wants to buy a restaurant for the most part, right? But look at that. It was making new highs, so I put it in here. It's about the only thing was making new highs. And so far, well, it's actually down 3% since I started tracking it. So it's not doing a whole lot. It's up 68% today. Anyway, let's take a look at we'll get through this real quick. Any stock picks, let me know now. First of all, let's take a look at the Ps, S&P 500, okay? So in theory, you have thrust, you have retrace, and then what comes next? Thrust, okay? So right now we're in the down thrust mode in the S&P 500. Went up and almost tagged that 30 EMA, close enough for a Landry Light pullback. Again, Go back to yesterday, day before, we're getting kind of stretched on the VIX. So you anticipate, you don't jump in midstream, but you anticipate a reversal when that happens. NASDAQ composite, a little bit weaker than the Ps in general, but you can see so far just pulling back a little bit. Bow tie moving averages or in downtrend proper order. I do like to add in the 50 simple and 200 simple when the market gets a little iffy like it is now, because they're well watched. I don't pay a lot of attention to them in general, but one thing I like to pay attention to when the market again gets iffy is the angle of inflection of the bow tie moving averages into the 50. And the NASDAQ's not a great example, but notice how these moving averages came down really hard and really fast to that 50 simple moving average. So that's something that's important. Okay, I'll come to that one. Keep them coming. The Rusty, same as it ever was, okay? Just abysmal. Big slide here, followed by a pullback. This thing topped out long before the other indices, so that was kind of an interesting thing that happened. That kind of suggests that speculation to some extent was leaving the market when you see that happen. I don't do a lot of research on this, but some of my peeps and Facebook do, and I thank them for it. But if you look at something like the equal weighted S&P, there's some very interesting things that happen there versus like the spider. So the equal weighted S&P died out a long time before the spiders did, and their point on that is that the overall market is not doing as well as the S&P might suggest. And the S&P is at higher levels because these stocks are weighted higher, okay? And I don't know how they weight, maybe on capitalization, but it's kind of like you had the mags, for instance, which we'll take a look at anyway. You had the mags that were kind of hanging in there, right? And they began to implode, and then the overall market comes down. Mags, by the way, rallied up to that 200. Again, I don't spend a lot of time with the 200, okay? But again, I dust it off when I need it. But you can see we've kind of rallied up to that 200 simple moving average. If you look at, there's a few areas that are strong, and a few being keyword in that sentence. Gold stocks, you can see right here at brand new highs, and gold, the commodity itself. Now, gold stocks can be a little choppy, but we could see some setups here fairly soon. Notice the amount of those we have in the Landry 100. We haven't seen any setups lately because it's been kind of wide loose and all over the place, and hasn't been anything to my liking, but it's possible we could see some setups there fairly soon. Copper, none of those areas that has been doing really well today, notwithstanding. You see getting a bit of a knockout type of move. I wouldn't count it down and out just yet. Now, throw a dart at most other areas. This is internet. You can see so far just pulled back, rolling back over. And as you can go through just these, I'll try not to bore you too much, but broker dealer selling off fairly hard. We've been seeing some setups here lately. Biotech got whacked yesterday, hitting some brand new multi-month lows. That's basis the IBB. It's chopping all over the place, but in general, which way is it headed? Lower, right? Software, same sort of action as a lot of other areas. Notice, by the way, that it stalled well short of its prior highs in here. I'm not a huge fan of trading retracements, but as I often say, sometimes on a double top, it stalls short of the double top or it overshoots it just a little bit before coming back in. Medical devices, you can see, has rolled over and so far just pulled it back. And like I said earlier, you got to be careful playing that relative strength game because drugs were one of the stronger areas, but now they've rolled back over. So be darn careful, unless, of course, you're doing something like gold or whatever that could trade contra to the overall market. Transport's been in a pretty serious downtrend. The Dow theorists are probably all over that. Jets has been leading them lower. I think I've talked about the system here quite a bit. When the airlines begin to rally, you short them. Who was it? Warren Buffett. I'm sure it's a joke, but allegedly he paid somebody $100,000 a year to tell him to not let him buy another airline. Now that's a commitment device if that's true. I'm sure it's not, but it's kind of funny nonetheless. Banks so far just pulling back a little bit. Regional banks not looking so hot either. Leisure hasn't been doing that well. Take a look at PEJ. Okay, we're short again, CCL, but if you look at the Viking and Royal Caribbean and all the other cruise lines aren't doing so hot right now. So the bottom line is most areas remain in downtrends. There's not a whole lot to get excited about. Energies have been a little strong as of late, but they just look like an electrocardiogram. So as a trend follower, it's going to be hard for me to get on board there. All right, so Chris A, or CJ, as we call him in the group, wants to talk about DJ, DG, several gaps down, MA cross. Yeah, I hear you. It looks like it bottomed out, but keep in mind that markets have long, long, long memories. So anybody who owned this stock up here, okay, is probably thinking about getting out. They probably just, closed their eyes and said, "The hell with this thing. I don't care." But now that it's begun to rally, the more it rallies, the more they might think about taking that money off the table. And if you think about it, it's kind of going back to I thought I would do a presentation without quoting Sakota or Tom McClellan's late mother, Mary McClellan, but her statement that people buy and sell stocks for a variety of reasons. So people might need money. People sell stocks when they need money, buy stocks when they have money, and others use more sophisticated methods, paraphrasing. So somebody might need money as this thing begins to rally. So I would leave that alone. It'd be hard for me to get excited about that. ERJ, that's going to be a defense stock, right? I think. Yeah. That actually looks pretty darn good. Yeah, there's so little out there, but that looks pretty good. In fact, that would have probably come up in the scans tonight. Yeah, who gets Stewart? High five. Very good. Yeah, that looks good. Now, I'm going to pick it apart a little bit. And like I just said, the only caveat is that you're playing a relative strength game and the market's questionable, or you find in the overall market. You probably won't see this as an official recommendation from me. I think it looks pretty good. Initially, I want to give you a high five. As I pick it apart a little bit, I don't like it quite as much. I like it from the 30,000 foot view. Okay, it's in an uptrend. It was in a kind of a nice persistent type of uptrend, and then it accelerated higher and then pulled back. So I like all that. One issue that I have is when these stocks just make a few wide range bars as part of their trend. And this is not an extreme example. This is an okay example. Like sometimes you'll have like just happen to have a random pencil here. A bar looks like this, and then you have a pullback from that, and people get excited. It's like, well, hang on, this was just kind of more of an aberration as opposed to a longer term sustainable trend in the overall market. So that's one thing that I wouldn't like about it, and combined again with the fact that the overall market's a little questionable. And can this sector trade contrary to the overall market? Maybe it can. If there's enough wars going on, which they seem to be, then maybe so. But I'd pay attention to the fact that, again, we just had a few big wide range bars. And if we come all the way back to like 46, then it would definitely be all bets are off. So a good eye overall, but I think it has a lot of issues. Okay, so Chris was saying that something about 7-year lows on DJ. Yeah, I'm a fan of the Phoenix pattern. And the Phoenix pattern is just like a bow tie or something, but I don't like this big gap in here. But I'm a big fan of stocks that go down and bottom forever. Dick Fruth has done a lot of research on those type of stocks. His book is it's worth reading. Parabolic Stock Moves or something like that. I always forget the name of it. And his publisher didn't want to use the word parabolic. And when he looked it up and saw that there were no books with parabolic in the title, he's like, I want to use it. So, but he does the what he calls tombstones, where they go down, they bottom out a little bit, and they have a couple of rallies and then they die out. And when a market does that for a long, long time, you work through all that supply. You work through all that tax loss selling. People die, unfortunately. People get divorced. I mean, there's always something other than a fundamental reason how the watch works, why they're buying and selling those stocks. Okay, any more? Well, obviously, I want to thank everybody for attending. Appreciate you taking time out of your busy schedule. I'll take a little delay here, see if anybody on YouTube has any questions. Other than that, okay. Well, thank you again for attending. I'll see most of you here in a few minutes in Facebook. Everybody else, have a great weekend, and may the trend be with you. Hope to see you again next week. Subscribe and like this video if you liked it. If you don't like it, go have no fun somewhere else. Thank you so much. You're welcome. You're welcome.